Thank you, everybody, for being on the Balanced Wealth webinar here today. We're joined by Nic Gookin and Garrett Vanhal, and Ryan, as always, to kind of walk through an introduction to Bitcoin, talk a little bit about what it is and kind of the investment thesis around it. As always, if anybody has any questions, please feel free to ask them at any point during the presentation. I know Nic and Garrett have a really good deck put together here to walk through Bitcoin, some of the kind of moving parts around it. But we want to make sure that all of you that are a part of this are getting answers to the questions that you find most important and that you're getting some value out of it. So, Nic, go ahead and pop to the next slide for me.
Cool.
So just a quick kind of breakdown of the agenda. We're going to talk about what Bitcoin is. And additionally, just to add some context, we'll have Garrett go through a little bit of what blockchain is as well. And just get an understanding for the crypto market generally. We'll talk a little bit about why now. I know that everybody looks at Bitcoin and says, man, I should have bought it, 10 years ago. And what's the investment thesis around having it as a part of our portfolio today, and then we'll wrap up with that. So again, anywhere through here, go ahead and ask questions. We're happy to answer them or fit them in where it makes sense. And what I'll do now is I'll kind of introduce Garrett a little bit so we all know who Garrett is, our extra speaker here. I don't think Nic needs any introduction. If you don't know Nic yet from being on these webinars, he's our CIO and he's awesome. So he and Garrett will be kind of taking the reins on this one. But Garrett Vanhal, he lives in Chicago. He's a regional director at an organization by the name of Bitwise. Bitwise is about a $12 billion asset manager that focuses only in the crypto space. So, he is, and Bitwise as a organization are crypto specialists, as we would call it. So, this conversation is going to be centered a lot around Bitcoin. But generally, if there's other questions or if this leads to other conversations around other pieces of the crypto space, Garrett and the entire team over there at Bitwise are just such a huge resource for us. So we're excited to have him be a part of it here today. So to kick everything off, I'm going to go ahead and hand it over to Nic to start with just what is Bitcoin, and then we'll go from there. So Nic, it's all yours.
Perfect. Thank you for the intro, Bob. Thank you all for joining us. We've been sort of giving you death by webinar lately. I know that last one was a couple of weeks ago on the psychology aspects of investing and also just rebalancing as a whole. So this one will be a little bit more unique, and I'm really excited to do this particular presentation because clients have been asking me questions about this for the last 10 years or so, and we've never really had like the greatest tools or answers to like guide them or giving them an answer of like, oh, go do it somewhere else. And so now today, I'm going to give folks a deeper dive on what it is and also give some context into what it tangibly means for some of our clients here. So what is Bitcoin? There's a lot of ways to try to summarize it, and this was kind of the best framework I think that will be most applicable, not too far into the weeds, but also peel back the onion a little bit as far as what it is. So first and foremost, it's a new transaction technology. It was an experiment. It was the first implementation of what's called an open ledger blockchain. And so we'll spend some time going through just what is a blockchain. I know we don't want to hit y'all with jargon. We want to make sure it's understandable and normal language. And then secondly is like outside of this cool new way to do transactions, what does it mean for your investment portfolios? And we'll go through how I can help diversify and be a source of returns. So with that, I will hand it over to Garrett to talk about what is a blockchain.
Yeah, thanks, Nic and Bob. Happy to be here today. So essentially how we think of a blockchain is just an overall system that that records all transactions. You can think about them as computers that are linked together in a peer-to-peer nature. And so like the best blockchains are decentralized, meaning no one person, company, or entity controls that database of transactions. And so you can kind of think of this as like a PayPal, Venmo compared to banks. And so with PayPal, essentially they're just moving. If I send Nick $100, they're essentially moving the $100 from my Excel spreadsheet over to Nick's, and they can do that in a pretty fast manner. Compared to banks, they have to go and talk to each other to verify these transactions occurred, which is a timely ordeal and can even be more costly as well. So I'll move on there, Nick.
Yeah, absolutely. It's a great example. It's like the single ecosystem versus multiple ecosystems trying to talk to each other, right? So that's why PayPal was so innovative, is it took it, instead of forcing everybody to use the same bank, because like nobody really likes that idea. PayPal was kind of a half step in this direction toward, okay, maybe you'll have your traditional bank account and then you'll also have PayPal to sort of be this intermediary thing. So on that note, so what is blockchain then?
Yeah, so essentially, because the Bitcoin network has all of these operators verifying every transaction in real time, and it's all on its own database, they don't have to spend the time and effort talking to these other databases, and that's why they can run so fast and so cheap versus the other private counterparties, aka mine and your individual banks.
Yep. Got it. So we'll go into this more, and we can probably spend a whole hour just talking about blockchain specifically, but we're gonna keep the conversation moving here and just kind of go through the history of where this all fits in the technological revolution, so to speak.
Yeah. Essentially, we view this this breakthrough of this distributed ledger as just a breakthrough in computer science. And so everybody on the call knows how the internet, World Wide Web, email all changed the world forever, and more importantly, changed different sectors for investing. And so we view Bitcoin and crypto really just disrupting the financial service and banking industry that really has never been disrupted by technology like every other industry in the world has been disrupted. And so even when you look at like 1994, the e-commerce secure socket layer protocol, I'm sure a lot of you remember before 1994, it was a very bad idea to buy any goods or services online, as your information was just instantly stolen. And so that wasn't until this SSL protocol got introduced to the internet, which made your information private, and you couldn't get your credit card stolen at that point in time. Lo and behold, Amazon was founded in 1994, became one of the biggest companies in the world, and that was because of a breakthrough in computer technology. And it's kind of the same lens we view the Bitcoin and crypto industry as a major breakthrough in computer technology.
Awesome. So, like more specifically, like what does blockchain do, or why is it better? Why is it a breakthrough?
Yeah, today, if you want to go through your bank and say you have a loved one in London and you wanted to get them over $10,000, the actual fastest way to do that today is going to your local bank, getting $10,000 of cash, put it in a duffel bag, get on a flight, and hand that to him. So if you wanted to do a wire, it's going to take half a week to do so. You can only do it Monday through Friday during business hours, and they're typically going to charge you a few percent, if not 5%, to do that transaction. Where if you do it through the crypto rails, and like for this example, the Bitcoin network, you could do that transaction 24 hours a day, 365 days a year, and you could see people sending $1 billion on Saturday at midnight, and it's going to settle in 10 minutes, and it's going to cost less than $5 to do so. And so even when you pay your bills today, it's a slow process for people to take your money, and crypto can just speed this up and make it much cheaper.
Got it. Love that. So yeah, I'll keep going along here.
Yeah, and so we'll take a second on that. And so no bank has ever had this uptime of about 100% since Bitcoin was launched in 2009. Bitcoin has been up 99.99% of the time, which is the most uptimed network or like bank in the history of our world.
Yeah, so I think of this even, I don't know, I see stats like this about like cell phone coverage too. It's like our network's good like most of the time, but no cell carrier or anything like that is even as up as often as the Bitcoin network is.
Absolutely.
And Garrett, we did get a question from a client, and this might be changing gears a little bit, but if you could just maybe touch on it, or we can hold it for the end, just the environmental impacts of Bitcoin and the Bitcoin network. How do you view those, or is there any, sort of insights on that?
Yeah, I think a lot of people always have thought Bitcoin has been a negative in like the ESG conversation, just because of how much computer power is needed to run the network. There's been a lot of ESG studies, even recently as like KPMG, that has looked into it, and these studies have shown the opposite. It's actually very good for the ESG aspect, where there is a lot of like lost energy in the world. And so you can, instead of the energy being lost and never used for anything, a lot of people are attaching Bitcoin mining onto volcanoes, onto flare gas down in Texas, things of that nature, that's just lost energy. And you can convert that into, dollars essentially, and a new way to transact with the Bitcoin network.
Interesting. Thank you, Garrett.
Yeah. All right. So that's a little bit about blockchain and like tangibly how we use it today, or how it can be used today to move funds and things around. And that's really just scratching the surface of what blockchain can do. But for this presentation, we'll see how much time we have at the end. We can go into some more unique examples. But then the next question is,
Hey, Nick, really quick, I'll interrupt you. Sorry, and then
yeah.
I'll let you get into this. So we had another question. Are Bitcoin's transaction as secure as the slower bank-to-bank transactions?
Cool. All right. I'll let Garrett steal the thunder there. Go ahead.
Is it more secure than bank-to-bank transactions?
Yeah.
Is it as secure?
As secure? Yes, there's never been a fraudulent Bitcoin transaction. Everything is agreed upon because you have hundreds of thousands of these Bitcoin miners or node operators verifying every transaction to occur in 10-minute intervals. And because there's so many people looking at these transactions and verifying, a fraud, a wrong transaction has never gotten through and been verified in that sense.
Wow. Well, that's pretty good. Never is hard to beat. So, so can it go up in value? That's the next question. Like, what's the investment case here, and or why? What causes that? And the short answer is very similar answer to just about anything, but there's actually a limited supply of Bitcoin in circulation in total. Which is kind of hard to wrap our minds around, because like when we think computers and the internet, we just associate infinite with it, right? So like this is a finite part of the internet infrastructure. And then at the same time, there's increasing demand for it. So those two factors are really what can make the price fluctuate, and does make the price fluctuate up and down. So I'll let Garrett talk a little bit more about the supply side of Bitcoin.
Yeah, so people view like Bitcoin and compare it to gold pretty much hand in hand at this point. The reason because of that is, even if we find a brand new gold mine today, it takes a lot of effort to manufacture that gold, to mine it. And so we do add about 2 to 3% new gold to the world every year. With Bitcoin, kind of the same thing is going on, but there's a known number of Bitcoin we're going to mine ever of 21 million. And there's like a vesting schedule or an inflation schedule per se on Bitcoin. And so every 4 years, what they call the Bitcoin halving occurs. They add half the amount of newly issued Bitcoin to the world every day. So to say that in a different term, today we're adding 450 total Bitcoin to the world every day. And then 4 years will go by, and then they'll be adding 225 Bitcoin to the world every day. And then there'll be 112 and a half Bitcoin to the world every day. And so there's like a known scheduling for Bitcoin where, like I said before, we add between 2 and 3% new gold to the world every year. Because of this issuance schedule, right now we're adding 0.8% of new Bitcoin to the world every year. That'll happen for this next 3 years, and then that'll be cut in half. Then it'll be 0.4% new issued Bitcoin every year for 4 years, and it'll be cut in half again, 0.2%, then again 0.1%, so on and so forth, until the very last Bitcoin is produced or mined or added to the world. And that's that 21 million number. So if you want to go to the next slide there, Nick. And so there's only ever going to be 21 million Bitcoin. And so this slow inflation aspect to it really helps out when we see governments printing, adding a lot of dollars to the world, where we added like between over 40% of our new dollars here in the US after COVID. We did a very similar thing after the 2008, 2009 crisis. And so with there being that hard cap of 21 million, it's always kind of been a catch-all for global liquidity, and these governments adding or essentially printing money out of thin air. And so that's why the store of value, and it is talked about with Bitcoin in a very similar sense as gold in that way. And there, Nick?
And Garrett, just a quick question that came through, right? And I think, thanks for the question, Dottie. And I don't want to make you feel like anything's not a good question, because it is. But like her question is just like, is Bitcoin a physical item like a coin? Like, what is it? Like, what is the kind of idea behind Bitcoin itself, right? It's not a physical coin, but just share with us kind of what it is in and of itself.
Yeah, it was, it's technology within, so it's kind of like going back to that PayPal analogy, where in PayPal right now you have access to, I guess, all the dollars that you could get your hands on, and all like the US dollars are in existence in a sense, where with Bitcoin there's only going to be that 21 million. And so it's in the same realm as just like a digital asset. So there isn't any physical thing that you can hand and hold, but it is on the internet, in the digital landscape, which is becoming more and more of a hot topic, where kids these days are getting more associated with their cell phones and whatnot at very young ages. So this is just like a virtual way to store value that's not physical.
Yeah, correct. Yeah. So yeah, great question. And again, please keep the questions coming, because I'll try to throw them in there when it makes sense, or as we can to, as we go through the presentation.
Yeah. So keeping it moving along here. So now we know there's limited supply, but why does it make sense to look at Bitcoin now? And this is a 10-year look back of Bitcoin versus other popular asset classes, including the S&P 500 or gold. GLD is the purple color there. And those other ones just look flat, or like there's barely any wiggle in comparison to the magnitude of the move from Bitcoin over the last 10 years.
And I think the reason I'll just step in here too, and the reason we bring this up for everybody on the call is oftentimes, as we've had these conversations, and quite honestly, even us as advisors, and as individuals, it's like, well, did we miss the boat, right? Like you look at this 10-year look back and you look at the 41,000% return, and it's like, well, yeah, maybe we should have invested in it. but is now a good time to be investing in it. And, Garrett will go through some things that I think are really helpful and insightful there. But one other thing that I always want to remind everybody of is like, looking back at, anchoring, all the things we talked about with behavioral finance last week, right? Anchoring, looking back and, kind of uh, expecting that things, will go a certain way because of what happened in the past. Like it's not about what's happened over the past 10 years. It's about where is that value now? How does it fit into portfolio? And what was the reality also, I think, of investing in it over the past 10 years relative to today?
Mhm, mhm. Yep, absolutely. So we're going to spend a minute here. Well, Garrett is going to spend a minute here talking about why Bitcoin might not have even, why did we not, as advisors, recommend this to you 10 years ago, right?
Yeah.
And kind of lay the foundation for all that. So let's keep it going here.
Yeah, so today we definitely do feel it is an investment grade way to get access to a new asset class here, but that definitely was not always the case. When Bitcoin was a penny, you could have bought a large amount of them for only $1, but the person that was running it, this was the way he was processing. It was just a guy on a single RAM computer. If he didn't pay his electric bill, the whole network would have gone down, aka not an investable asset at this point in time.
Yeah.
And then once we got to a dollar, the leading exchange in the world, New Liberty Standard, you can see here it says at the bottom, I will try to process all in 48 hours. You're essentially linking your PayPal account and sending it to this email address, which definitely was a little sketchy at that point in time. So there's no chance this was an investable asset at a $1 mark.
I love the last line there too. Everything on this site is legal as far as I know, right? Like, and this was the leading exchange for Bitcoin when Bitcoin was worth $1, right? So any of us, it would not have been something that we'd look at and say, yeah, we should get involved in that.
Yep. Absolutely.
Yeah. Yep. I will say I have a memory. This was like 2010, so maybe Bitcoin was a year or two old, and a friend of mine in middle school got into online video games for the first time, like actually like playing with other players. And to buy certain things or power-ups or whatever, you would have to use Bitcoin on this website. And so he was using like his parents' PayPal account to buy I don't know, things using Bitcoin online in 2010. If he, obviously hindsight bias, right? Like he would be an absolute billionaire today if he had just kept those Bitcoin, right? And not spent them on video game things. But it's just funny. Like that was my first interaction with Bitcoin was 2009, 2010. So
Yeah.
Yeah,
right.
so then a 10x further at $10, Bitcoin was starting to gain some traction. There was media stories. You might have seen it, but it still had a lot of reputational risk. The largest use case in the world at the time was Silk Road, which you could research what that was if you're not familiar. And this is what the website looks today. And so it was used for illicit purposes back then. So, AKA also at $100 per Bitcoin, still not an investable asset. Or I mean, $10 a Bitcoin.
Yeah.
And then another 10x away at 100. This was the largest custodian at the time. It's called Mt. Gox. They were the largest custodian, like I said, that did blow up. What Mt. Gox stands for is actually Magic the Gathering online exchange. And so I'm sure some of you are familiar, maybe have played Magic the Gathering, but kind of what it looks like is some kids playing a playing card game in the basements, and their exchange blew up. So it turns out these Magic the Gatherers were not the best way to be a custodian of digital assets and a whole new asset class in itself. So not investable just yet. At $1,000, Bitcoin's beginning to go mainstream, but still no institutional allocators. This is a picture from the largest Bitcoin conference in the world at the time, and so the guy in the Hooters T-shirt saying we're going to change the world with a new currency, and with a marshmallow behind him, really wasn't to be taken serious from allocators and asset managers. So still not an investment asset at this point in time. Followed by $10,000 per Bitcoin. This isn't too far back. This is only 3, 4, 5 years ago. At this point, the technological risk has been solved. The custodial risk has been solved. The trading risk has been solved. We're starting to see some institutional demand. We're starting to enter the mainstream. And then at this point in time, the leader of the SEC, Gary Gensler, started to do a crypto crackdown. So there was still a huge regulatory risk overhanging at $10,000 per Bitcoin. Mm-hmm. And then finally, we got to the $50,000 level. This was after the Bitcoin ETFs were approved. Most of the regulatory risk have disappeared at this point in time, but there was still one major risk associated with it, and that was what if our government tried to ban Bitcoin like they banned gold in the 30s. And so the recent executive order and the friendliness of our SEC really does resolve majority of that risk. And so today, Bitcoin did cross 100,000. We did have 101 a little bit earlier here today. Great to see us back to that nice round number. And the next slide, the Bitcoin. I was at the Bitcoin tracker. With that Bitcoin tracker, like we said, is the most best uptime in the world. And what this slide is showing here is the Bitcoin network is by far the largest computing network in the world by a factor of about 10,000. And so very impressive how much computer powering and demand has gone into this, and is the most secure network in the world.
Yeah. Yeah. And just flashing this slide back up again, the uptime tracker. So it's this is Bitcoin today and over the course of its history, but despite that history that we just walked through of the single computer and all those other stages, it only had a couple blips of downtime. And in the last 10 years in particular, it's been up 100% of the time, which is much, much greater than what any bank or even like cell phone carrier could even say, right? As far as internet providing. So
while processing hundreds of billions of dollars of transactions.
Yeah. Yeah. So on that note, thank you, Garrett, for going through the history there. And I just wanted to take a minute to kind of paint the picture of the current landscape of Bitcoin. And with that, so these two companies, you've probably never heard of them before, but they're some of the biggest players behind the scenes of your investment accounts today, as far as helping to execute and fill transactions for stocks, bonds, ETFs. And they now play a pivotal role also in the clearing, is the official term of it, for Bitcoin and Bitcoin ETF transactions. And yeah, so on that, today's landscape, Garrett.
We've been tracking this chart for a number of years now, just pretty much showing all of your largest, well-known legacy financial institutions. And this is a scatter plot of what kind of access they provide or allow on their at their companies. And so maybe 2 years ago, this was not even halfway filled of what it's at today. We think in the coming years, majority of these large bank-like financial institutions will have access to all of these. So adoption is occurring here for adopting digital assets.
Yeah.
And this is all digital assets, so this is not just crypto, or excuse me, Bitcoin in this instance here. And we had a question from a client, just if you can quickly, Garrett, I
Yeah.
know there's probably a lot with this question, but how does Bitcoin compare to other cryptocurrencies? Like, what's the
Mhm.
difference between Bitcoin and, you can pick anything, Ethereum or, Solana or anything in general, however you want to take that.
Yeah, yeah. So we kind of already talked about Bitcoin having that hard cap of 21 million and having all of these Bitcoin miners verifying, securing the network. And so that's actually all Bitcoin can do. You can only buy Bitcoin, sell it, send it around to each other, and you could actually like destroy your Bitcoin if you wanted to burn money. And so outside of those four things, you can't do anything else with it as of today. And because of that, it has a very high security level because it's very basic. When you get past Bitcoin and you get to things like Ethereum, which is the second largest, Solana, XRP, you kind of think of those different blockchains as like an open source computer, or like your iOS or Android phone system, that at the very base level of software, they're all just detailed if-then statements. And so what these different cryptocurrencies provide, what we call smart contracts, you can start building different applications on that software. So you could have it replicate a stock market, replicate an insurance company. You could have it do cross transactions if you're buying and selling a house. Instead of having an intermediary hold both of those assets, do that cross transaction, and they get paid a lot of money for doing so. You could already code some of these other cryptocurrencies, to do that for you. And so we don't really view any of these as like currencies to replace the dollar or anything like that. We think Bitcoin, which is like 50-60% of the whole market, is that store of value use case. And then a lot of these other ones are competing as like tech startups, where over time, a few of those are going to definitely win and get majority of these type of smart contracts if-then statements on top of them and using their software. But essentially, a lot of these are like open source that you can start building different applications on top of.
Gotcha. So,
Yeah.
so we had another question that sort of ties into that, Garrett and Nick, if you want to take this as well. But is the goal to replace the monetary system with Bitcoin, or like what's the ultimate goal, or what's the, and she also put in here, is it regulated? I think we went through that as well, right? Like now it is, the peer-to-peer network itself regulates it, right, within the system. But what's kind of the goal behind Bitcoin, if you could put it into kind of a simplified vision?
Yeah, I think the store of value is essentially the biggest goal of what Bitcoin provides here today. If you had $100 5 years ago, today it's worth $75. A lot of people invest in cash, and the reason why that $100 is worth $75 is because our government keeps increasing money to the world. And so having that hard cap of 21 million, like we said earlier, is beneficial for like that inflation weakening your purchasing power. And if you invest in scarce assets that are getting adopted more and more, that the gains that are there, offset a lot of that inflation that has been eating your purchasing power. And so maybe one day it can be, maybe like a more of a global thing where we are paying in Bitcoin. We're a very, very long way from doing that, where cash, I've never bought anything in Bitcoin, and I work at a crypto firm. So cash is still, and the US dollar is still a very good way of doing so. And so, no, we don't think like Bitcoin is replacing the dollar. And just like gold, where people kind of use gold in that sense, but we're also not going to the store and whittling off gold to pay for any goods or services either.
Mm. Yeah, I think the last mile of every transaction will probably be completed in the native currency, right? So like if you're in the US, it'd be dollars, or UK, it might be pounds or euros or whatever. But like the bigger transactions where you're sending funds, you know, in a way that you would prefer to be faster, maybe even more secure, that's when Bitcoin is coming into play in like tangible use. But yeah, to your point, I don't think I've ever bought anything using Bitcoin or cryptocurrency today, aside from the video game example
Yeah, I was
of
going to say, except for the video
yeah,
game stuff,
yeah,
Nick.
except for like $1 billion of Bitcoin, but aside from that
Right.
transaction. Yeah, yep. So great question though. I'm gonna keep it moving, just painting the more of a picture of the current scene, current lay of the land. Go ahead,
Yeah,
Garrett.
yeah, I can talk. I can talk about this one.
Mhm.
So with there being that like hard cap number, like we've referred to numerous times again, any sort of demand could definitely increase the price pretty dramatically. And more of our politicians and Congress are getting behind digital assets and Bitcoin. And so there is a bill being proposed for our government to acquire 200,000 Bitcoin per year for the next 5 years. So that would be, 5-ish% of all Bitcoin, where our government today does have 200,000 Bitcoin. And so that would be doubling it. And when we put our Bitcoin in our strategic reserve as a government here recently, the verbiage that they used wasn't that we're looking into it, not that we might buy Bitcoin. The words we use is we shall buy more Bitcoin, and they've been reiterating that over and over again. And so, so far, the U.S. government, all of our Bitcoin has mostly been from confiscations. We've never pressed the buy button for Bitcoin, and once it does, we think that will spark a lot of other countries most likely looking to start, and their governments acquiring more and more Bitcoin as well, which that demand would get pretty exponential pretty quickly. And like we said, there's only 0.8 new percent new Bitcoin added to the world. It really doesn't take much to see some big returns.
Mm-hmm. Yep. So keeping on the regulatory track here, so that was the president or an executive order. What about the SEC?
Yeah, the SEC, Paul Atkins, he's a pro crypto advocate. This last election cycle, we think half of Congress is now pro crypto. And since the new SEC has turned over, they have dropped more than a dozen lawsuits. And so the crypto industry has kind of been faced with headwinds from all our regulators. And now it feels like we're getting some of these to be on our side. And so just turning these headwinds into a tailwinds, which is probably one of the most bullish factors in crypto today. Mm-hmm. And then talking about those governments kind of all maybe going to have an arms race to acquire more Bitcoin versus each other. Our individual states are starting to put these proposals together to buy at the state pension level. And so we did just see this week the first state to approve it was New Hampshire. And so I think half of these states have some sort of legislation being proposed, and it's great. And some have said no, some are still working on it, and it's great to see the first one, say yes here recently. Mm-hmm. And so now New Hampshire can allocate up to 5% of their state pension money into Bitcoin. So we've come a pretty long way. And this is a chart just showing all the governments that have any sort of Bitcoin that we know about. There could be some of these countries that we don't know or haven't disclosed that they have Bitcoin or acquired it. And so both the United States and China are near this 200,000 level. We did put our 200,000 in a strategic reserve. And so we don't believe we're going to see us decreasing that number. So as the United States starts doing it, we think other governments won't want to fall behind, and we'll be acquiring more and more Bitcoin. And then there's kind of that game theory playing out even in Europe today, where Italy announced last summer that they're going to increase their capital gains on Bitcoin up to 50%. And so you have to pay the government half of your earnings on Bitcoin or crypto if you sold it for a gain. That got such bad backlash. They took that back within a week or two. And then more recently, Czech Republic, they did the inverse. They're doing zero capital gains on their crypto holdings if you hold it for 3 years. And so, if Nic had $1 billion, I'm sure he'd be looking to move to the Czech Republic to sell some of that to get away from his tax bill. But that's just a game theory in itself of them trying to attract maybe younger, ideally richer civilians to come spend their money in their country to spark some growth and spend their tax dollars in that country as well.
Yep. Yep. So bringing it all back home here, limited supply, the 21 million total Bitcoin in circulation. And then we're seeing a lot of increasing demand from corporations, from states, from countries. And so those two factors together is a very basic math problem where, if limited supply, increasing demand are both catalysts for an increase in price. So the next question is, where does it fit in my portfolio today, or how should I look at it as the end person, end investor here? And just flashing this chart back up again, it's like, well, obviously 100% of your portfolio should be in Bitcoin, right? Like that's what this chart would tell you. But we know that that's not appropriate, right? Like we wouldn't recommend that for anybody for the same reason we wouldn't recommend putting all your money into a single stock, right? So that's where we come into play and can help navigate what is the right amount to allocate to. And I know this chart has a lot of numbers and we've hit you all with a lot so far, but I love this study that Bitwise did where they took a traditional 60-40 portfolio and then they just layered in a 1% allocation to Bitcoin. And you can see, and rebalanced it quarterly is the other big thing here. The annualized return for almost every percent you added almost another percent of annualized returns onto it. So even a small sliver, like a 1% allocation could lead to, or has historically led to, an extra 1% of growth in the portfolio. And where we landed, and I can talk about this more, but we landed at roughly a 3% of the equity portfolio. So in a 60-40, that means it's roughly 2%. So probably like splitting the difference here between these two buckets after conversation amongst ourselves, the advisors on our team, and going through the full investment committee process just to make sure that it was a significant enough amount to move the needle, right? But also something we take very seriously is we don't want to take any undue risks or risks that we don't need to take. So with that allocation is where we landed. And this is another great case study here that Bitwise did again. So this is taking that 60-40 portfolio. It's assuming a 5% allocation to Bitcoin. And it's looking at the rolling 3-year snapshots of time, right? And so the black line is the normal 60-40 portfolio. And then the green is how much alpha or outperformance having that allocation to Bitcoin gave you, and specifically rebalancing. And I think the most interesting thing about this chart is that Bitcoin did not just go straight up in a linear line this whole time. Like it had massive swings up and down. And there was plenty of 3-year time periods, like specifically from 2021 on, where Bitcoin was negative over a 3-year period of time. Yet it still had positive return influence on the portfolio because of those rebalancing benefits that we talked about in our last webinar, which is just the fact that it's zigging when other things are zagging, and it's giving you that diversification or that place to rebalance to. And I don't know how it shows a win rate of 100%, but even if that was less than 100%, like this would still be something that we look very seriously at allocating to for our clients, right?
And I'll say some compliance safety measures, right? Like none of this guarantees anything going forward, right? But what we're trying to do is, look at this as kind of the overall concept for the, environment now for Bitcoin, how we factor it in, and it all goes back to diversification for us and how these different investment pieces move either together or independent of each other. And we feel that with everything we've gone through and with the kind of supply and demand that having, and this is not in all portfolios as well, just to be clear. So not everybody on this call or everybody that might listen to it has this. It's more in our kind of active models that we have, but none of this guarantees everything, but we are certainly trying to take advantage of the resources that we see to put hopefully our clients in the best place possible to take advantage of what may happen in the future. So
yeah, absolutely. And just visually, like what a 2% allocation looks like. So just the 60-40 donut, the 40% is the bonds or the safe money, and then the blue is the equity. Even though Bitcoin does have a lot of like store of value characteristics and like people compare it to digital gold, the fact is it's still quite volatile. And so we don't think that it was appropriate to fund Bitcoin from the safe money necessarily, like the traditional bond portfolio. Where for the folks that we did implement this for, it was funded from equity dollars, not from bond dollars. So to us, we still view it as a risk asset. And with that, I really love, for all of you who have not seen this, I love this funnel, and I think that this will really just tie it all home for us. But whenever we're talking to clients about like what should you look for in an advisor, they ask like what questions should I be asking? And my answer is make sure that you're working with someone who has a really wide top of the funnel, meaning like they might not know everything there is to know about investing, but that their investable universe is really broad and really wide. Like if you work with someone whose top of the funnel is this big, then they end up just recommending the same thing to every single client. And like that's, I think we can do better than that. I think that there's ways to get from point A to point B in a way that aligns with our clients' values and the things that they care about. So Bitcoin ETFs specifically just launched within the last year plus, like about a year or so ago. And before that, if we were to recommend you make an allocation to it, you'd have to go to like Coinbase or some other platform and open an account and buy Bitcoin directly. And they charge a commission, a percentage to buy and sell. So like not a great user experience overall. And today, we now have Bitcoin ETFs in our investable universe, and we've seen that they perform the way that they're supposed to. They actually track the price of Bitcoin the way they're supposed to, and therefore they're now a tool in our toolbox, so we can layer it into client accounts and not have it be this like clunky, expensive way to get the exposure. So say all that to say, for the folks that it makes sense to own it, we are not anti-Bitcoin people, right? I think that's the one takeaway from this conversation. But the other thing is I mentioned like your values and your goals. Like if this is a totally customizable experience to all of our clients, right? Like if you just adamantly don't like, if that makes you feel uncomfortable or if you don't want the Bitcoin exposure and you have it, like we can totally subtract that, customize your investment experience. Like again, there's ways to get from point A to point B. There's a lot of ways to do that. But we want to give you our best thoughts and foot forward in this. So yeah. All right. So any questions? I know we got a few throughout the call there, but if you have any questions now.
Yeah, and then there were great questions, and I think they came up at the right moments in time. So I hope that we, addressed all of them. And for everybody on the call, if there's anything specific for you, if you noticed that, hey, I've got some Bitcoin allocation, or Bob, Nick, I want to talk specifically more about how it makes sense, just as always, reach out to us. We're happy to have a more specific conversation, kind of in a one-on-one thing. But feel free to ask questions now. And if there are any questions, I know that there's another slide, Nick, that you can go ahead and pop over to that these are just kind of some noteworthy developments for the year of 2025 that either may spur some additional questions or at least are some additional conversation as we wrap up here for the last about 9 minutes of the webinar here this afternoon.
Mm-hmm. Yeah.
So nothing yet. So if you guys want to go through these, whichever one you want to pick out, and Garrett, if there's one you like best, or Nick, go ahead.
Yeah.
Yeah.
Well,
Want me to go? Or
right.
you go? Yeah, I saw a lot of these were talked about briefly earlier. The top or the left three: the executive order, our strategic Bitcoin reserve, the SEC crackdown. Actually, the Abu Dhabi Bitcoin bet, they didn't add Bitcoin to their sovereign wealth fund until after the United States put our Bitcoin in our strategic reserve. They essentially said they were waiting to see what the United States did with their Bitcoin before entering. So that's kind of interesting where because we've done so, this could be just the first country to allocate following us. There was some big updates on different banks getting the green light to be a custodian for crypto assets. BNY Mellon, which is, I think, the oldest bank in the US, they can now be a custodian, which they were never allowed to do so in the past. There actually was a big hack that you might have heard about. The Bybit had $1.5 billion in a hack this year. The beauty of these Bitcoin ETFs, like I'm not talking about our Bitcoin ETF here at Bitwise. We go through some of the top of the line custodians to secure your Bitcoin. It is never online, and so the way that hack happened, it was in like what's called a warm wallet, meaning it was connected to the internet. Ours are never connected to the internet, stored in a cold wallet, and we have what we call like a whitelisted accounts. And so I guess, knock on wood, say if somebody for the first time ever did hack Coinbase custody to get into one of our Bitcoin wallets, because Coinbase has never been hacked yet. If somebody did get in, we only have 4 wallets or 4 places that we allow our Bitcoin to get sent to. And so even if somebody got into our Bitcoin wallets, wanted to send it to some illicit activity, they physically cannot send that Bitcoin to anything but those four wallets that are the other custodians. And so I don't want to say impossible, because I don't think anything is 100% impossible in the world, but we would be shocked to see if anything negative like that could happen in our Bitcoin ETF.
Mm-hmm.
Yeah. And I know that's always a concern there. So, I think that, just to kind of wrap things up and bring it all together, first of all, Garrett, thank you so much for being on here this afternoon. Thanks for taking the time. We're going to put up our disclosures. Yes, Nick, that's smart. Thanks for taking the time, Garrett. Appreciate it. Look forward to seeing you, some point here in the future. But, I hope that through this conversation with Garrett and with Nick and me jumping in there here and there, right, that it just helps to lay a little bit out about what Bitcoin is and how it works, kind of the importance of it as we view it from kind of a globalized economy and the decentralized nature of it. But also how taking that and applying it to, our foundational view of how we build portfolios and financial plans for clients, we think is just an important thing to share with y'all and walk through. So again, we're going to wrap it up here for this afternoon, but if you have any other questions, any other concerns, please feel free to reach out to me, Nick, anybody on the Balanced Wealth team. And again, Garrett, thank you so much for the help. Thank you for being here and spending some time, and hope everybody has a good rest of the day.